I'm Surendra Dwivedi, CEO of Barjeel. It is my pleasure to welcome you all. As a valued investors, your trust is the foundation of our relationship. So today's session reflects our ongoing commitment to bring insights from some of the most respected minds in the industry. Thank you for joining us today. We meet a very interesting point in India's economic journey. Despite geopolitical uncertainties and ongoing market fluctuations, India continues to stand out as one of the fastest growing major economies in the world. However, as an investor, we know that markets do not move in a straight line. So many factors continue to influence market sentiments. So this naturally raises some more important questions. What should investors expect from Indian markets over the next few years? And the most important question, how should long-term investors navigate volatility while staying focused on the wealth creation? So to address all these questions, we are privileged to have with us one of the respected voices in India's investment industry. It is my privilege to introduce our guest speaker, Mr. Nilesh Shah. Mr. Shah is the managing director of Kotak Mahindra Asset Management Company and one of the most respected investment personalities. He is a part-time member of the Economic Advisory Council to the Prime Minister of India. He is associated with the Unique Identification Authority of India. He is a member of Insurance Advisory Committee set up by IRDA, and he is a board member of Association of MFI. Nilesh sir, thank you for joining us today. We are honored to have you with us. I now invite you to share your views on the outlook of Indian economy and markets. Over to you, sir.
Thank you, Surendra Bhai, and very good afternoon to everyone. When we talk about Indian economy, always remember, whatever one says about India, opposite is also true. We are a bundle of contradiction. On one side, from our office in BKC in Mumbai, we can see Geo Center, where world's most expensive wedding took place. And we can also see Dharavi, the world's largest slum, the most opulent place to hold a wedding, and the biggest slum coexist in Bandra. That's how India is. But there are few things which are changing for India. One, the talent which was going abroad is now one settling in India for becoming entrepreneur, or in some cases coming back. Most of you went to Middle East in search of better opportunities. Even today, many Indians travel abroad for opportunities. But compared to the past, where more than 90% of IIT, IIM batch will go abroad for opportunities, now majority of batch is staying back in India, and in some cases coming back. Let me give you an example of a talent which came back and what it is creating. I met an entrepreneur called Srinath Ravichandran. He did his engineering in India, worked in multinational company, then decided to pursue MBA in America, went to Columbia, did his MBA, joined Wall Street, started managing fixed income portfolio, made money, and one day decided to come back to India to set up aerospace venture. 10 years back, 2007, 2016, he came back to India and set up a company called Agnikul Cosmos. He set up a space tech when entire space sector was reserved for ISRO, a public sector undertaking. 10 years he struggled, he succeeded, he again struggled, and he again succeeded. Today, Agnikul Cosmos makes world's largest 3D printed rocket engine. They make rocket engine in just 3 days. They are able to fire multiple rocket engine at the same time, enabling them to attach more rocket engines if the load is heavy or if they want to send satellites in higher orbits. Their rockets run on aviation turbine fuel which planes use for flying. Their rockets does not require peculiar launching pad. It can be launched from nearly anywhere. Put together, Agnikul Cosmos today is able to launch satellites in low Earth orbit at a competitive pricing to the globe. Now, certainly, Agnikul Cosmos is not SpaceX. It's a wonderful company, but certainly it's not technological leader like SpaceX. But the limited point is when talent either remains in India or starts returning like Srinath Ravichandran, we are also able to create technological breakthrough, which creates growth opportunity for the country. All of us have seen SpaceX miracle of catching the booster of a rocket falling from the sky. Agnikul Cosmos will also be making an attempt to catch the booster in next 3 or 4 months. Whether they'll succeed or not, who knows? But they'll also be attempting the same miracle which SpaceX did. So limited point, talent is coming back to India, which is good for economy and growth. In many a times, talent fails because there's no money available, there's no capital available. Elon Musk, the world's richest man, himself put at risk his capital. And that's where miracles like Tesla, SpaceX, XAI has been created. In India, capital was in short supply. And hence, unless your parents were rich, it was difficult to become businessmen. Today, we have vibrant system of private equity venture capital firms. There is vibrant public issue market. Last year, we had highest number of IPOs in the world. Obviously, in quantum, we were not largest, but in terms of number, we were the largest. Today, for good entrepreneur, for good business idea, capital is available. This combination of talent plus capital is making many businesses succeed. The third failure of the past was infrastructure. Our ports were clogged, power was unreliable, power cuts were frequent, octroi hampered free movement of goods. Net net, there were many challenges. Today, infrastructure is being built at a rapid pace. Infrastructure is being built at a scale which is enabling entrepreneurs. Between 2014 and today, we have practically doubled our road, port, power, airport, telecom, metro network. This is enabling entrepreneurs to pursue growth. This Triveni Sangam of capital, talent, and infrastructure is the real story of Indian growth. Could there be challenges to this growth story? Undoubtedly, yes. The first challenge, which is near term, is monsoon. This year is super El Nino. Monsoon has been delayed across India, and only 40% of India is river fed. 60% depends upon monsoon, and a delayed monsoon could obviously have impact on India's growth story. Monsoon is cyclical. Some year it will be good, some year it will be bad. The second challenge for India in the medium term is deep technology and artificial intelligence in particular. In the race of AI, US and China are way ahead of everyone else. We have about 4 crore people working in Indian IT industry. They directly or indirectly depend upon IT sector, and they collectively earn $350 billion. While China is manufacturer to the world, factory to the world, India is back office to the world. And today, with AI, with automation, that model is coming under pressure. We don't have much role in AI ecosystem, albeit some corrective action is being taken, but will it be sufficient? We don't know. In the semiconductor space, TSMC, Samsung, SK Hynix, they are ahead. Even Intel is now thinking of setting up a chip manufacturing plant. There are 324 machines which are making semiconductor chips. Not even one of that is present in India. Undoubtedly, we have been late in semiconductor making. Now, as we speak, Tata, Micron, and CG Electrical is setting up semiconductor plant in India. They will still be making previous generation chips. The world would have by then moved to next generation chips, but at least we will be entering the race. On LLM, India launched its sovereign LLM called Sarvam, but that's significantly behind what ChatGPT or Anthropic or Claude.ai is. For Sarvam to scale up to that level will require capital. And unfortunately, we don't have hundreds of billions of dollars to invest into such development. Now, can India be lucky? Can India collaborate with other nations who are also behind in AI race? Canada, Japan, Germany, Italy, Middle East. One doesn't know whether this will happen or not. But certainly in the LLM space, India has a model Sarvam, but that's not as good as what the top end models are. And the gap is very, very wide. On the GPU side, we don't make any GPUs. One area where India could do well is enterprise AI and AI application. Some of the startups in India have created voice AI like Maya 1 and Luna. These are closest to the human voice today globally. Their ability to create emotive voices is also unique. I'm sure the world will be willing to pay for such applications of AI. The other thing will be enterprise AI. Every company wants to leverage artificial intelligence, but you require data to be arranged for the same, data to be analyzed, data to be presented. And for all those jobs, Indian IT companies still will have a role. Net net, I will say there are challenges to the Indian economy. Some are cyclical, like monsoon. Some could be structural, like deep tech and artificial intelligence. How we manage those challenges will determine what will be the growth story of India. At current level, can India continue to grow between 5, 6, 7%? Answer is yes. Can we take that to 9, 10, 11%? Answer is unlikely. For that to happen, we'll have to pursue deep reforms, land acquisition, labor reforms, capital market reforms. In current democratic situation, that's unlikely to happen. So India will be fastest growing major economy in the world, but unlike China, will not grow in double digit in their heydays. We will be mid single digit growth. Now, in this kind of scenario, how do we make money? We know in India, whatever one says, opposite is also true. There will be opportunities, there will be risk, and managing those, India will still be one of the fastest growing economy simply because its entrepreneur talent and infrastructure is coming together. We think if we back right entrepreneur, we should be able to still generate decent return. Undoubtedly, we don't have entrepreneurs like Samsung, TSMC, and SK Hynix at this point of time, but they are still very good compounders. Chinese market today is trading where it was 17 years before. And I wouldn't even remember where Indian market was 17 years before because we have put it so far behind. This combination of talent, capital, and infrastructure creates opportunity, which is worth capturing for compounding. In our portfolio, I'll just share some of the traits which we have picked up. We invested in an engineering company. They were so good in making precision engineering that when Toyota wanted to outsource their engine spare part, instead of choosing a German, Japanese, American company, they chose this Indian company where we had invested. The focus on precision engineering, relentless focus on quality made them first supplier to Toyota for engine spare part. There's another company where we have invested. Again, their client was Japanese. They wanted to make a particular kind of next generation turbine. For that, they needed particular kind of alloy. Before any German, Chinese, American company could deliver, this Indian company delivered that particular alloy. It's a small company, but in terms of capabilities, they are today right there with the best in the world. We recently met a promoter who is competing with a global company which has 50% market share globally. And this person walked into one of their buyer who is setting up a shop in India and said, here are my 20 machines. You can operate them. And once you realize that they are better suited for Indian condition and far more productive than this global machines which you have bought, you can give me order. He put his machine in the multinational company's factory and challenged them to test it with full confidence that his machines will outperform global machines made by a company which has 50% market share globally. These are the kind of entrepreneurs who will withstand all the challenges and continue to make money for shareholders. Obviously, apart from entrepreneurship, what we need is governance practices. If governance is not good, entrepreneur will make money and we as a shareholder may not. So we definitely support entrepreneurs. We ensure that governance practices remain good, and over a period of time, they compound wealth for shareholders. As non-resident Indian, your worry is rupee depreciation. Rupee will continue to depreciate. Our inflation remains higher, productivity remains lower, and we import too much of oil as well as gold. Oil is needed for economy. Gold is not needed as much, but we continue to import. With that kind of situation, there's no way rupee can appreciate. So when you invest in India, do take into account 3 to 4% depreciation of rupee on a regular basis. 3 to 4% does not happen in a linear fashion. Sometimes it could be 10, 12% like last year. But now you could be confident that unless until there is some geopolitical risk which we have not factored in, rupee depreciation going forward for next 2, 3, 4 years will be far lower than what we saw in the last 1.5 year. So invest in good quality entrepreneurs, budget 2 to 3% depreciation of rupee, and stay invested for a longer term. Indian economy and Indian entrepreneurs, while not growing as fast as China in double digit in their heydays, will still be growing at mid-single digit, 5, 6, 7. Monsoon is bad, will grow at 5%. Global economy is bad, will grow at 5%. Monsoon is good, global economy is good, will grow at 7%. But within that, if we can pick up entrepreneurs, they will be growing in double digit. And as long as they follow the path of governance, we should be fine. This is broadly how I see today's market. There is also one more opportunity for all non-resident investors. The government and RBI has launched FCNRB deposits. India is sitting on $700 billion of reserve. Undoubtedly, they will have ability to repay all this debt over next 3 and 5 years. There is fantastic leverage available by many global banks. And on a leverage basis, return goes into double digit dollar return on Indian credit is a fantastic opportunity. And you should grab that as much as possible. But once that allocation is completed, do look at Indian equity on a longer term basis. Hopefully, that will also be a rewarding experience. With this, Surendra Bhai, I will end my talk, but happy to take questions.
Thank you very much, sir. Thank you for those insightful perspectives. So I request investors, you can write your question on chat box. We will try to address as many as questions we can. So, sir, one of the common questions some of the investors has asked me. So you said that market will be range bound and a lot of uncertainties still are there. So everybody was waiting for the deal. Now deal is also happened, but market is not taking any clue. Still volatility is there. And the currency is also, depreciating. So at this moment of time, do you think that next 3 years, the market can give us, compensate the currency risk as well as the return for the NRI investors?
So, Surendra Bhai, as I mentioned, 2 to 3% depreciation of rupee you need to factor in, accounting for our productivity and inflation differential. After that, can India deliver high single-digit dollar return? Answer is quite likely. This is coming purely because now markets are fairly valued, unlike September 24, where they were trading at a much higher premium. India always trades at a premium to its peer, and that's mainly driven by our superior growth and better return on equity. But in September 24, we were trading at almost 70% premium to our peer. Today, that premium has corrected to roughly about 15%. So market has become fair. And with currency depreciation over next 3 to 5 years, is it possible to generate high single-digit dollar return? I believe it is possible.
Okay, thank you, sir. Thank you, sir. You have talked about IT industry. So right now everything is looking a very dicey, very negative. But going forward, after implementation of AI, do you think our IT industry, these companies will play a role, and we should stay invested and wait for the right time?
So Surendra Bhai, our view on IT is not very firm. It changes with data. But at this point of time, we believe there will be winners and there will be losers in Indian IT industry. Winners will be companies which are equipping their workforce with AI, and they are able to roll out cheaper, better, faster solution for their customers.
Okay.
They are able to break the barrier by providing value to the customer. There was a time when unless until you had $1 billion turnover and $200 million coming from couple of sectors, global customers were unwilling to give you contract. Now, today it is possible for a small IT company to demonstrate that their application of AI is very, very good, and he will get that contract irrespective of size. So we believe small and mid-cap IT companies which are
Yeah.
leveraging AI should be able to do well. And the large IT companies which are not able to leverage AI could be under pressure. So there will be winners, there will be losers.
Thank you, sir. Thank you. Given the complex market challenges, so amidst the trade tariff, Middle East crisis, with the deal under a 60 days window and the Fed to raise interest rates, how it is going to affect India and a strategy we should take, particularly for the lump sum investments? This is one of the questions raised in chat box.
So one, all these bad news are known to the market and to that extent discounted. President Trump will continue to make posts on Truth Social, and that will continue to move the market. The oil, both price as well as availability, is subject to what Iran does in Hormuz. All this are known risks and to a great extent factored into the prices. Now, of course, when there is positive announcement, prices sometimes run up. When there is negative announcement, prices fall. But if we see from September 24 till today, market has moved between 22,000 Nifty on the lower side and 26,000 Nifty on the higher side. And as we speak today, we are exactly at 24,000. So it is somewhere in the middle area from a valuation point of view. Bad news are factored in. Any good news will create upside, and any bad news can create downside. But we have no control over what kind of tweet President Trump will do, what Iran will decide. We'll have to live with it whenever those events shape up. My recommendation is that instead of lump sum, try to invest on a systematic transfer plan basis. You shift over next, let's say, 3 months into 12 installments. Every 10 days, you can put some money. If there is war and markets have corrected, you can put some more money. If there is a lot of positive news, you can probably hold back a little. But systematic transfer plan will be a better way to invest in today's market than a lump sum investment, even though we remain bullish on a longer term basis.
Right. Sir, one of the common questions, even in chat box also. So as an NRI, we always, struggle how much portion of our portfolio we should allocate to India. Comparison to US, where the yield is really good. US market is performing really good, especially AI companies. So what do you think? How much ideal situation? How much portfolio we should allocate into India comparison to US?
So let me talk about today's scenario. I will put zero in US debt today because I have FCNRB deposit available. On a leverage basis, FCNRB deposits can give double-digit return. To generate commensurate double-digit return in US, one will have to take far higher risk. So don't put anything in US dollar deposits, US dollar debt funds. Try to put that in FCNRB deposit. The second thing is on the equity side. Undoubtedly, today, US is world's largest equity market. They are funding innovative companies like Anthropic, like Claude AI, like so many such other companies. That exposure is not available in other markets. So as NRI, should you plan to put 30, 40, 50% of your capital in global assets? Answer is undoubtedly yes. There is always a country which will do better than India in a year. We will do better over a longer period of time. There will be someone who will do a sprint in marathon. We are regular compounder, regular runner in marathon. So when you see opportunity like that, you should capture. So I will say, short answer, about 50% of your portfolio you can keep in equity asset class globally, primarily US, China, or a developed market fund or all world fund. But on the debt side, take advantage of FCNRB. It's very, very attractive.
Okay. Thank you, sir. So, sir, if you compare the similar market as India emerging markets in past 1 or 2 years, if you look at the India market is in all parameters, including currency, market performance, is not even catching to the emerging markets. So, what is the reason if you compare April to April?
Sure. So in September 24, we were trading at 24 P. This obviously is the benefit of hindsight. In those days, we thought it was trading at 20, 21 P, but the earnings didn't come. Earnings didn't come partly because of war, partly because of labor code announcement, partly because of economy was slowing. Put together, earnings didn't come, and hence equity markets corrected. Second reason was FPI selling. FPIs were selling because there was no AI trade in India. They were seeing Taiwan, South Korea, China running, and they wanted to invest in AI related ecosystem. Unfortunately, in India, we didn't have one. So valuation and lack of AI investment opportunities put together created this scenario where for 2 years, Indian market has underperformed. As I mentioned, now we are at fair value, about 19 times forward earning. Second, valuations have corrected. Put together, now with massive 2 year underperformance, India could be considered to invest into. Do we have a semiconductor chip play, or do we have a play on artificial intelligence? Answer is not yet, but we have at least started running with with semiconductor chips between Tata, Micron, Crompton Greaves by leveraging artificial intelligence through various applications. So overall, I will say, yes, one can consider investing with a longer term view.
Thank you, sir. Sir, what's your views on the commodities market like gold, silver, and minerals?
Silver is a trading market. New supply has emerged as silver mines have opened in Peru, Argentina, Mexico. The demand has continued to come down a little as people are finding alternatives for silver in triple digit. So silver is a trading play. You'll have to play it on quantitative basis, momentum basis, or simply following a technical chart. On gold, we remain bullish. Very recently, World Gold Council interviewed central banks of the world. 47% commented that they will increase their gold holding. If central banks continue to buy gold, then gold has no option but to keep on going up. In India, we have 15% import duty and 3.45% GST. So what you get for $100 in Dubai, you will get similar thing by paying 118.45. So all NRIs must purchase gold abroad, not in India. You should not even buy jewelry from India because import duty and GST is unnecessary burden on you. You can buy the same jewelry from Dubai. But gold, we continue to remain bullish. Silver is a trading market. You'll have to play with momentum or chart or something else.
So, sir, as a fund manager, what are your favorite sectors? Which are the sectors in near 2, 3 years you think will perform much better?
Uh, See, as a fund manager, we are always supportive of our entrepreneurs. If you get entrepreneur who wants to come in page 3, no point in investing. If you get an entrepreneur who is working like crazy to compete with the best in the world, then by and large, you are not going to go wrong massively. The second thing is governance. Uh, Governance is of utmost importance. Otherwise, entrepreneurs will make money and you won't. So we prefer bottom up entrepreneur plus governance to invest. But since I can't talk about stock specific name, there are few sectors which are worth looking at. The one is precision engineering. Today, China is a global leader in mass scale production. India could have a niche on the India could have advantage over niche products, specialized products. Precision engineering is one sector where we believe a lot of exports will happen, and that's one sector which one should invest. The second sector which should do well is cement. Cement can't be imported. It's also difficult to export. And India is going on a massive infrastructure drive. Cities, states, and central government all are putting focus on faster execution. So some of the orders which have not been converted in cement sector, we believe will do well. So cement is one sector. The third sector is banking and financial services. Indian economy is holding well. NPS have not risen, and banks have hit high CD ratio. Now with FCNRB, that CD ratio pressure will go away. Put together, banking, cement, precision engineering, these are the sectors which are worth looking at. Two other sectors which you are very familiar with is hospital and health, hospital and hotel. As tension in Middle East continue to simmer, a lot of Indians traveling to Middle East will spend money in India on domestic tourism. Many people will prefer domestic tourism over global tourism. So hospital and hotel, this is also one sector where we believe some compounding is possible.
Thank you very much, sir. So, sir, this is again the question related to FII and DII. So, one side FII are still taking out money. So, what do you think when they will come back? What will trigger to them? And what are the government steps taken? Recently, government has taken some of the major steps, but those are enough. The second question is, DI are investing a lot of money. They have a huge confidence into the Indian market. So can we survive without FII? Do we have that much capacity with DII that market will perform only on the basis of DII?
So Surendra bhai, FII and DII both travel in the same boat. If share price goes up, both of us benefit. If share price comes down, both of us lose. We are not competitor to each other, we are cooperator to each other. Now, why are FPIs leaving? One, in September 24, valuation was 24 times. Today it is 19 times. So undoubtedly, the selling spree, which was there at 24p, will come down. Second, if we look at FPI, they are selling because there was no AI trade in India. Now, over next couple of years, Tata's semiconductor chip plant will be probably out in the market. We will see some of the apps getting delivered. We will see many Indian companies leveraging AI to fast track their knowledge absorption and comparable products to the globe. So even that should come through. So precision engineering, banking, cement, hospitals, healthcare, these are some of the sectors which one should consider. But most importantly, focus on good entrepreneur.
Thank you, sir. Thank you very much. Sir, one of the common question, so related to FDI. So, which is one of the favorite sector for FDI, sir, in coming 2 years?
The largest FDI in recent time is in banking services. Emirates NBD invested $4 billion in Ratnakar Bank. Mitsubishi MUFJ Group invested $10 billion in Shriram. If IDBI Bank was privatized, I'm sure it could have been a $7-8 billion deal. So the largest FDI in the recent time is coming in banking and financial services.
Okay. Thank you, sir. So almost all the questions you have answered. So thank you, Nilesh. Thank you once again for sharing your valuable insights and spending time with our investors today. Your perspectives on the economy, market, and long-term investing have been extremely valuable. And I am sure our investors have benefited greatly from this discussions. So on behalf of everyone at Barjeel, I would like to thank all our investors for joining us today and for their continued trust and partnership. We look forward to staying connected and bringing you more such insight conversations in future. Thank you and have a wonderful weekend. Thank you very much.
Thank you.
Thanks again,
Bye.
Nilesh Shah. Thank you.
Bye. Bye, Deepa.
Thank you.